Crude prices are ticking up. This follows comments by Algeria's energy minister that all options remain open, including the possibility of an oil output cut or freeze at this week's informal meeting of oil-producing and exporting countries OPEC in Algeria.
I think oil prices are set to be very volatile this week as we see the smoke signals coming out of Algeria and some signals going forward regarding further meetings, an agreement on a production cap. The challenge, of course, is that so many investors have banked on the idea that these are fairly historically low oil prices and a kind of mean reversion trend heading back to $65, $70.
Skepticism about the oil industry has prompted money managers to cut their bullish bets to a one-month low. Prices took a hit after it became clear that Saudi Arabia and Iran were making little progress in achieving a preliminary agreement to freeze production.
I think there are too many conflicting interests here. What scuppered the deal earlier in the year was the lack of agreement between Iran and Saudi Arabia, that key Middle East axis. And nothing geopolitically has altered with regard to Iran trying to ramp up production back to levels and exceeding levels that it saw pre-sanctions at a time when Saudi Arabia is continuing to pump oil out the ground at a very elevated rate.
Signals have been mixed so far on whether a deal on cutting or freezing production is possible. OPEC members are set to meet informally on the sidelines of the International Energy Forum in Algeria, where they will discuss a possible deal to limit output. Maria Galang, CCTV.
Well, Jade Barker joins us in New York now with some insight into this. Jade, welcome to the show. Now, of course, OPEC's previous attempt to agree on an output freeze failed. What are the chances we'll really see some sort of production cap this time around?
Well, Ajay, there's not a lot of optimism that we're going to see any concrete agreements come out of this meeting on the sidelines of that International Energy Forum, and that's for several reasons. Despite both Algeria and Venezuela making comments about stabilizing the market, investors should bear in mind that neither of these countries really have any meaningful muscle within the OPEC organization. Meanwhile, Iran has said it should be exempt from any production freeze, as we just heard then in that report, as it tries to get its production up to 4 million barrels a day after those Western sanctions crippled its oil industry for more than 3 years. Libya, of course, also doesn't want to curb its output after all the disruptions to its oil production, after political instability there. And Saudi Arabia, quite rightly, says it's not going to agree to any freeze without equal sacrifice from other OPEC countries. And sources told Reuters last week that Saudi Arabia doesn't expect a decision to be made in Algeria, so that doesn't bode very well. But on the other hand, Algeria's oil minister has warned his counterparts not to come out of this meeting empty-handed. So what we might see is not a full deal, but perhaps the start of a discussion that could lead to an agreement at the formal OPEC meeting in Vienna, which is on November 30th.
Now, Jade, some camps believe that even if OPEC does agree on a production freeze, we'll see members like Nigeria and Libya, like you mentioned, still pumping almost at peak capacity. Now, how does an agreement really change the reality that there still is oversupply of oil in the market right now?
Well, that's exactly right. And many say it won't change. It won't have much impact on this oversupply issue. And for investors, really, actions should speak louder than words. OPEC members, Saudi Arabia, Iraq, Kuwait, and the UAE, all producing at very close to all record levels. Russia, key non-OPEC producer, is at record levels. And Russia and Saudi Arabia are really fighting it out for oil sales to China at the moment. And neither side appear willing to concede on that. Iraq also been trying to increase its oil production after it really recently restarted its oil exports, as we said before, cutting a preliminary deal on revenue sharing with the Kurdistan regional government. And like I said, Libya also keen to get its oil industry back on track. So none of these oil producers have shown any signs that they're willing to slow down production. Add to that comments from Nigeria's oil minister, who made the point that even if there is a freeze, it's not going to make any difference because someone can just move in and take over the market share. There's a parade of oil producers ready to jump into any hole that exists from the US, Mexico, Canada and Norway that aren't OPEC members and wouldn't be held accountable to any OPEC agreement. So this might not help the oversupply issue anyway.
Now, like you just mentioned, and in fact, according to an OPEC report in August, forecasts for non-OPEC supply were actually revised upwards. They said it will be likely to gain about 350,000 barrels a day in 2017. Now, what does this mean for oil prices specifically in terms of an outlook?
Well, according to analysts we've spoken with, it could mean seeing prolonged low oil prices. They say we should be very happy with where we are at the moment in this $40 a barrel range. And we could go lower if more supply, of course, comes onto the market. But on the other hand, we could go as high as $50 a barrel. Of course, none of us have a crystal ball, though. And if there was some kind of natural or man-made disaster like a war or a hurricane that takes out supply, then this could, of course, push things higher once again.
Well, many thanks, Jade, for those insights. Jade Barker joining us in New York. Well,